Well, good evening and welcome to what should be a new installment of my trade plans going forward with the S&P 500 at what I would consider as a necessary level to hold support in order for the bulls to have any kind of strength going forward. Now, a couple of trades I have been able to take during my travels. I was holding these March 295, 94, at 94. As price action was rolling through the 50 SMA and did this huge sell-off here on volume, I was able to take those off around 205, the majority of them anyway. So locked in the profit there. And then on December 6th, I actually added back into some of them at about the same level, actually the exact same price I had my initial entry. Did not take any off on this initial pop, did not add any more, and I'm still holding those. Fortunately for me, it's not the same size position as the original entry. I just like these calls and the price action that was going along with it at the time. So I'm holding those. Here on the 10th, I was able to take a small trade here. Went into some in the money calls here. I don't have the date. I believe those were the following week's expiration. Anyways, I got in at five of them at 362. Not a huge position. Once it came up, it tested this breakdown level. I went ahead, I took the majority off, and the rest of them I closed off, I believe, just under $5. I'm not sure why I put the note on or didn't put the note on there. So ended up being a very nice trade there. Again, still holding these 295s. I'm also still holding the end of the December 300 calls, which was a huge mistake. I got into it with a lot of things going on, and I was unable to manage it. So right now, I'm just holding those on hope. Um, Here on the 12th, I was able to take a quick trade here with the trade crew guys. The play actually worked out. Just I was traveling, had a lot on my mind, and was unable to manage it properly. So I got in 267 calls here at 238 and trailed me out here, as you can see on dead lows of the day, 226. Those went up to I think just over three and a half, almost $4 a share, or excuse me, $4 a contract. Would have been a nice trade there, but again, too many things going on in my mind, and I was in the middle of traveling, so should have known better. Just saw an opportunity, wanted to take it, wasn't mentally prepared for it. Over here on the big chart, this is what the yearly candle looks like. I've pulled this up a few times on some of my videos, and it's kind of easy to see. Um, we had inside month here in November and has now broken down to the low side. Now, the lines on the previous chart are not corresponding to what's going on here, but it looks like we're simply digesting. It's not necessarily a reversal year yet. That would have to be a confirmation of a break below this 250-ish level into next year. That's how a candle is confirmed once price action breaks above or below it. So right now, still just expecting price action to chop, although there is a lot of volatility, and if you're on the wrong side of the trade for any significant amount of time, it can really, really hurt. So um, just an inside month break to the downside, which is a bearish pattern in and of itself, but as I've said many, many times over, the S&P 500 is a vehicle that is designed to go up. Aside from the crash years of 2001, 2002, and 2008. It's designed to go up and will most likely continue to do so. And as I've also stated in several of my videos, this kind of vehicle, when big money gets out, it has to sell to somebody. There's not enough retail in the world to absorb the selling that it takes to accommodate the selling from institutions. So all the selling that's happened this year, you're talking trillions of dollars. There's not enough retail in the world to absorb that. So big money is selling to somebody. You have to stop and think about that. Who is going to be selling to? Somebody else with big, deep pockets. Now, with that in mind, those participants that are most likely buying this 250 to 2, excuse me, 66, 65 area, they're not going to sell out any lower. They have the funds to go ahead and absorb some more selling and continue to accumulate a position for another leg higher. There's a lot of uncertainty, a lot of unrest in the markets with the China thing that's going on, political wise, all kinds of stuff going on in the world that has an effect on the market. Not necessarily bullish or bearish, just uncertainty. The market hates uncertainty. That's why it was doing what it was doing before Trump was elected, and so that's why we're doing what's happening now. So until that is settled, going to have a lot of chop, a lot of volatility, and volatility should be considered a trader's friend because there's big moves that are able to be made. As you can see, I do have the RSI on here. Just I don't even touch on that in my videos. It's for a completely different purpose other than not applicable to these charts here. Anyways, here on the weekly time frame, looked like it was going to have a nice bounce up, ran right into the weekly ADMA, sold off, which is an algo level, excuse me. Um, Tremendous amount of selling. Volume does confirm there are participants that are actually getting out and actually selling harder and harder. But again, if big money is selling, it's got to be selling to somebody else who has big pockets. Simple as that. I mean, that's common sense. And in here a little bit tighter to the daily time frame. One of my favorite candlesticks here happened on December 10th, which is a hammer candle. Didn't quite close out highs, but you can still see where a lot of the volume is coming in. And that's where I can come over to this other chart here. And I don't have any new plan notes here. Just simply going to say this 255-ish area has to hold before I take any new positions. So I'm basically just being patient. I'm holding, bag holding those December 300s and March 295s, which have plenty of time in them. The December ones are probably going to be a lost cause. Anyways, what has to happen and what I would like to happen or like to see happen is, as far as on the daily time frame, price action come down here and maybe test this little bit of level here. Probably going to dip down below here, absorb the stops from all the bulls that bought here. There's going to be a lot of stops there. There's going to be a lot of stops below there. And the prior dip from earlier in the year down here, 250, 255-ish area. Participants are probably going to wait for this level. This is the most ideal area to go ahead and buy at versus this low. That's just how simply how trading occurs. You want to wait for the most opportune area. Now, buy the dippers, myself included, have taken many opportunities or many chances to catch a bottom, which been wrong on a lot of them, been right on a lot of them, but not near as wrong as the bears have been historically. So still going to continue to view the S&P 500 as bullish, just cautiously. I'm not going to turn bearish. However, if there is a close below this year's low of 252 and a half, what was the low here? Yeah, 252.92. A close below there on a daily basis will warrant me to take maybe some swings and some puts, only on a dead cat bounce. So I will not short a breakdown. I will wait for a pop and look for resistance at some of my significant levels here, the moving averages, the 8, 2150 or 200 SMA. I've also mentioned the death cross here in a couple of my posts on Twitter and stock twits. This indicator, this trigger, this signal or setup is a 50-50 shot. Historically, price action has already dropped by the time this occurs. Sometimes it continues to push down lower, sometimes it doesn't. Simply put, again, 50-50. So take your chance there if that's what you want to play. The pattern I do see setting up here. If I can go to a blank chart, it's going to be much easier to draw it here. I do still want to keep this channel that's going on for all of 2018 so far. We also have what's occurring now, which is a potential broadening wedge forming here. Excuse me, something like this. Lower lows, flat top, didn't quite reach all the way up there. So if it breaks down below here, closes below here, I have to wait for that 252, 253 area. However, if it gives a false breakdown here, rips back up through there, price target is going to be way up here simply because that's the pattern. I'm going to ignore these moving averages. There will probably be some algo selling, some little bit of resistance, some profit taking at these levels, but I will consider those levels to be traded as breakouts as it confirms and pushes higher and higher. So just a broadening wedge pattern that has set up. Another reason I'm not overly bearish on what's going on as far as the overall chart for the S&P 500, in order to have a bearish chart or to be bearish, I want to see lower highs and lower lows on the highest time frame possible. Here on the monthly time frame, we just put in a brand new all-time high up here in September. Yes, on lower volume. However, as I've stated also in a lot of my videos, as price action goes up, the amount of volume needed to push it up does not remain. You can see this. You can go back and look at Facebook, Apple, Tesla, Amazon, Netflix, Google, any big name, although yes, I am saying tech names, any big name, Goldman Sachs, anything that's pushed up and made new all-time highs this year, volume does dry up as you make new all-time highs. You can look at it as drying up or simply not needed. Okay. Anyways, with that said, we put in a new high, still have higher lows. So even if price action does break this 252, 253-ish area, a lower high needs to be formed in order to overly be bearish, in my opinion. that signifies a bearish trend in that there's going to be lower highs and lower lows. So plenty of things still working, not necessarily in my favor, but plenty of reasons still to be bullish on the overall market. Now, there are plenty of individual names that can be shorted fairly safely. Those names that have not held up too highs, have not followed the overall market, and some of the other weak sectors of the market. So anyways, I don't have any plans to add into these positions. However, if I do see a false breakdown of this 258 area, I will watch it closely and try to take some 260 calls about 2-3 weeks in the future for a move up to at least test the ADMA here, at which point I will lock in some profits, but I will hold the majority of it just to see if it's going to continue higher. I'm going to give myself plenty of time for that kind of move to occur. So right now it's just time to be cautious. I'm still going to take my trades from the long side for the S&P 500, regardless of what everybody's opinion is as far as credits, what the Fed is doing with interest rates. I'm still going to continue to say the S&P 500 is a vehicle designed to go up, and I trade it as such. So that's going to be my analysis and my trade plan for the S&P 500 going into next week. If you have any questions or comments, please feel free to leave them down below, and feel free to come join us at the Trade Crew chat room. Have a good evening, enjoy the rest of your weekend, and good luck on Monday.